Welcome back, everyone. My name is Ed, and this is the Soaring Dividend YouTube channel, where we discuss dividends and other passive income investing. In today's episode, we're going to talk about the 4 stocks that I sold completely out of my dividend portfolio and some of the stocks I'm thinking about buying within the next couple of months whenever I see the right time. So without further ado, let's head over to my portfolio and go from there. All right, here's my 25 stock dividend portfolio. This portfolio is primarily focused on dividend growth investing, and I'm adjusting my portfolio here and there, which is why I sold the last 4 stocks, which I'll talk about in a second, because the dividend CAGRs were just so low. The dividends were not increasing that dramatically, which that is the type of portfolio I want, even if it's a lower yield. So here we go. So let's head over to transaction history here. Here are the 4 stocks that I sold within the past month. We have Wells Fargo Center. I sold 7 shares of that, and I got $320. Wells Fargo Center just did not meet my standard, and financial stocks are just not really a good deal right now. They will increase over the long run, especially in 2022 and 2021. But I'm more backing companies like JP Morgan if I do invest in financial service companies. I think it was a good sell opportunity for me as I got a significant sell, which for like about $300, not too bad. Next up, we have Dover. I sold 2 shares of Dover for $300. Dover had such a little CAGR of about 2%, and that just was not doing it for me. So I sold it for a profit, and I'm going to invest that profit into other dividend growth companies. Next up, we have SPY. I sold 1 share of SPY for $425. This one was substantial for me as I gained the most money from the transaction. I bought it for like $250. Now I sold it for about $425. I know SPY will go up and it will increase over time because it tracks the S&P 500. However, the CAGR was just not, this just did not meet my needs right now and where I see myself and my portfolio going in the next 30 years. So SPY, I sold 1 share of that. And then lastly, I sold RioCan, which is basically a real estate investment trust in Canada. And this was a binge buy back in March 2020. I did not know what to buy back then, and so I was testing the waters with a few things. RioCan is a monthly dividend payer. I sold 6 shares of this for $18. This was a low yielding and a low dividend CAGR stock. It was costing me a lot of interest to hold it since it's a Canadian company, so I just sold it. It was such a small position that I will not even notice it gone. All right. So Wells Fargo Center, Dover, SPY, and RioCan are the 4 companies that I sold out of my portfolio within the past month. Companies that I'm thinking about acquiring. I'm looking at MO, so Altria, more in depth. I know they're having talks of moving outside of just tobacco and cigarettes and more into the electronic cigarettes and a few other different ideas in the long run. So MO is something I'm looking at. There's a big 10% drop in the share price recently. So I'm probably going to hop on that next market open, might shoot for $400 to $600 into MO. Couple of companies I'm looking at long term, and as soon as I see any sign of weakness of a 10% or 15% drop from all-time highs, I'm going to jump on, which is I'm going to look at Broadcom. Huge dividend CAGR right now of about, 47%. The company's dividends are growing drastically because that just shows how powerful semiconductors really are, especially when electronic vehicles are so important right now in the market, and there's so much demand for it. All right, the next one after Broadcom is Lowe's. I'm a big fan of Lowe's. You can't beat the 58 years of dividend increases. And as soon as I get to about $190, I'm going to stock up on a couple more shares of that. And then AT&T, the reason why I have that still here, and this is just a note, I'm not buying any more AT&T, but AT&T is just, I have spent $400 into AT&T. It's not a ton of money, and I'm down $6 right now overall since when I bought it. I'm going to keep it there for long term unless it hits $32 within the next year. I do not see that. as it'll take a long time for them to reduce the debt with the Discovery merger. So that is a quick update of a couple companies I'm looking at, some companies that I sold, and just let you all know that this is just for fun for me. I'm not a financial advisor by any means necessary. You do your own research when investing. Dividend investing long down the road is a great option if you want purely passive income. And dividend investing is my favorite source of passive income. I'm looking more into the house hacking, aka the realty market soon for some other passive income, but dividend investing is what I want to funnel my money into because I feel that it's really valuable long down the road. All right, everyone, without further ado, thank you for joining me today on this journey and good luck out there. I will see you in the next one. Take care, everyone.